Hello traders, in this module we're going to be covering the best of the best ACB templates. Hopefully we'll clarify some questions that have come up from traders after going through the other modules. Before we even dive deeper into this, I want to emphasize to traders simplicity, rinse and repeat, simplicity, which is the goal of understanding the ACB trade setups. Now, the simple basic model that we've gone over in all the other modules is Wednesday close in breakout. High of week, low of week, high of month, low of month, and then how does price set up on Thursday into our New York session. Now I've covered other opportunities, but we're going to be specifically addressing the criteria that was required for these instruments to make this list. Now I really want to sort of hit home to traders stepping back and not be trying to trade all the time, not be trying to catch moves all the time, not be so concerned with getting trades all the time, but really understand what a setup is. These setups you're going to see in a moment are the exact same on any instrument, the exact same criteria, the exact same setup with some subtle variations. Now these are New York session trades only. Now, the criteria that was required for currencies and indexes, metals, energies were slightly different. I'm going to show you a specific list to narrow down your focus even more based on the likelihood of certain instruments repeating the same behavior. They're going to be major currency pairs that never offer these types of opportunities. They just don't move that much. Some do, and their cross rate pairs do as well. Now, with currencies and the other instruments, we've gone back, we've covered the 4-hour timing cycle at the extremes. So I'll encourage you to go back and revisit that so that you understand the rotation of time when we are either in a new trend, an explosive coil for a trend continuation, or a reversal opportunity. And then we're also going to understand the importance of the front side of a month and the back side of a month, meaning we can be expanding the range week 1, week 2, week 3, and get our all-in opportunities on the front side, and we can get them on the back side. Now, my focus has been on the instruments that will potentially continue to do the same behaviors over and over again, which is why certain currency pairs do not come up on this list that I'm going to show you, because they don't offer the same opportunities. Now, to be on this list, indexes, metals, or oil must have delivered at least $2. The setup must be set up to deliver at least $2, 200 pips, whatever you want to call it, or more. Now, typically, if it's a 3-level movement, we're going to get 250 to 300 or $3 minimum on these ACB templates. Currencies must have delivered at least 100 pips of profit by the close of the day, give or take a couple of pips. Now, my main basket of instruments, as I've talked about, consists for the indexes of the NASDAQ and the Dow. Now, I also look at Russell and S&P on this exact same day, but typically the majority of my trades will be focused on the NASDAQ and the Dow. Now, I want to emphasize to traders, we're going to talk about this in a moment. I know there are going to be moves in Asia on other indexes. I know there are going to and instruments, and I know there's going to be other moves in London on the DAX or on the FTSE. But I'm talking about the New York window, the third session when we have an ACB coil sideways, a 3-session setup. Those typically are going to be the ones that will consistently deliver. Now, we will visit some examples of where these other instruments will deliver in Asia, they will deliver in London, but for rinse and repeat, we're talking about the New York session. Gold is my main focus. I will look at silver and copper, and of course, we're not talking about trades, we're talking about the ACB all-in opportunity, the best of the best. So that's what I want to repeat and clarify. I want to keep clarifying that so that traders aren't constantly concerned that, but this moved, but that moved. I caught this move. I'm talking about the best of the best, the all-in, fully scalable, full-size opportunities. That's what we're talking about in this module. The pound Canadian, the pound yen, the pound Swiss, and the pound Aussie. Now, they may only give 2 or 3 all-in 10-star opportunities in the course of a year. So understand that. But these are the pairs with their volatility that typically are the ones that have the highest probability in the New York session of setting up into one of these all-in ACB templates. Of course, our yen crosses and spot crude or West Texas oil. Now, just again to repeat this, it's important. There will be other instruments that will occasionally give 100 pips or more on currencies, or $2 or more on any of the other sessions or days that we don't maybe have on this list, as I just mentioned, the DAX or the FTSE or any other, the Nikkei, whatever you're trading. However, in my experience, the list above for the New York session, these are the instruments that have the highest potential and also manageable. So how many instruments are you capable of following? Just narrow that down. Follow your core basket that has the potential for the New York session setup. Now, if you're going to have a sizable opportunity in another session, which we'll see in a moment, those are the ones that we want to be taking profits, or the majority of the profits on, because there's still other sessions that can come back and eat into those profitable trades. That the third session, the New York session, if it's a large scalable opportunity, is the true ACB, because it's going to finish out the entire day and maybe the week or month and not come back at all. Whereas the other sessions still potentially may have a time, London or New York coming back to eat into a large scalable profitable trade. So I am aware, yes, there are going to be other large ACB type trade setups in other sessions. But for the purposes of this particular module, I want to emphasize we're going to go through the simple criteria and the importance of understanding that sideways coil at the extremes and keeping it rinse and repeat, because there are always going to be these continuing opportunities. So when traders I want to plant this seed right now. There are always going to be exceptions, always. And there's always going to be what abouts and what ifs and what about this and what about that. Remove that from your thinking and focus on hunting the setups. Master hunting the setups. Don't worry about what ifs, what abouts. Master the templates that we're going to go through, and you will start to understand the importance of not taking 50-50 trades anywhere else. Rinse and repeat. These are scalable 5-star opportunities. So the simple criteria, again, that we talked about for Wednesday close and breakout. Now, sometimes we're going to have markets that close in breakout and they may stay sideways in breakout for 2 or 3 days. At the extreme, the high of the month or low of the month closing prices. So often a market closes in breakout, doesn't set up. It may be a sideways ranging day the following day, and traders are like, well, nothing happened. It didn't set up. But they're missing the importance of timing. We can open up a new month and explode in breakout and coil sideways at the higher low of a new month, a new timing cycle. Go back and review those videos that we talked about, the higher time frame. New month, new timing cycle for either a reversal or a trend trade opportunity. So a question that came up is, can you do a video on back testing? Now, I've done several of these in the past, and here's the thing about back testing. Here is your back testing criteria right here. Market that closes in breakout. How does it set up on the following day in the session that you're trading? Now, we're looking at 3 session setups. This module is all about New York session setups. They need to close at the high of the month or week, or the low close of the month or week. Coil sideways with our EMAs, 200, 96, 50, and 20. The purpose of that is to align us so that we have all time frames. When this market coils inside of these EMAs, it is preparing for a large explosive move that is not coming back. Then we place our entry, our stop loss, our take profit levels, and once that level is hit, we shut the computer down and we walk away. The only other potential management of a trade is if it clears a level to go to break even and then walk away. Now, regardless, we're going to see some subtle variations in some of these templates, but I want to emphasize the 4 steps that we just talked about. Close and breakout, the highest closing price of the month or the week, number 2, coil sideways into our EMA, placing an entry, a stop loss, and a take profit level. Once it clears a level, going to break even and walking away. That is the ACB model. Now we're going to see some markets that may break out again and pull back and coil sideways. We may see some markets that have already broken down and left the station. We're not trading those. We're talking about the New York session entries. But the simple steps are to follow the process. Close and breakout, highest closing price of the month or week, or the lowest closing price of the month or week, entry, stop loss, take profit levels, walk away. That's your back testing model. That is your back testing model. That's it. That is the back testing. So the only thing that can be the variable in the back testing is how the trader will behave, because that is the steps 1, 2, 3, 4, and 5. Keep it as simple as possible. I am aware that we're going to see explosive moves in Asia on other instruments, and these are opportunities for session trades. The same playbook trade setups apply, but we're talking about the fully scalable opportunities for the New York session. And this is an example of an Asian cross pair, Euro-New Zealand, that has consistent, explosive volatility and moves like this every single month for great scalable opportunities for the Asian session traders. Now we're talking about New York, but I want to just repeat that these opportunities, once you master the simple understanding, close and breakout, coil sideways, lowest closing price of the week or month, number 2, entry, stop loss, break even, and take profit levels, the same process applies. Master the coil and the understanding of markets when they close and break out, whether they coil sideways for a couple of days or 3 days at the lower high of a month, but timings, levels, behavior of price. Coil, close and breakout, entry, stop loss, break even level, take profit, and walk away. Same thing goes for a move that occurs in the London session. We have a new month, a new timing cycle, a market that breaks down and coils sideways after closing as the highest closing price of the month at the end of a month, new year, coil sideways into our London window, entry, stop loss, break even level, and walk away. An ACB opportunity in the session. So we're going to see these. Yes, I'm aware of that. The what ifs, the what abouts, what about this, what about that. Remove that from your thinking. Learn to hunt the setup, because these setups occur all the time. And these are not trades. These are scalable trade setups that will significantly compound your account. These aren't, I caught the high, I caught the low. The market is coiling for an explosive move that is not coming back. When the market is not coming back and it's coiling, those are the trade setups that I want to be sized into. Now we can have a market that gives us a signal. We had a US index, and we come to the screen and it's already exploded and taken off and given London session traders the opportunity. Closed and breakout, new month, coiling sideways, entry, stop loss, break even level, walk away for London session traders. The New York session trader does not have the ACB template. We look at whatever other instruments showed up on our watch list. If traders choose to position themselves in an existing trend trade, just understand that is not the all-in scalable ACB template. The market has already left the station. So we're going to go through long examples first, the long ACB templates. Now the first example we're looking at is the NASDAQ. Closed on the Friday as the lowest close of the month after breaking out. 3 lower closes. Now we've gone through all the higher time frame charts, and all we're going to go through today are the 5-minute charts, because we're going to go back and just the criteria we just went over a moment ago the 4 steps: lowest or highest closing price of the month or week after being in breakout. New month, new timing cycle, the lowest closing price of the month, new week starting, coiling sideways. Well, what is the signal, Stacy? Well, the market closed in breakout and then closed on the Friday as the lowest closing price of the month. That is your signal. New week starting Monday, new timing cycle, heading into our New York session. Now, the model that we're looking at, this template, we've gone over this. Just a simple basic template, ACB template, is the close and breakout, reinforcing we can have a market that closes and breakout and goes sideways for 2 days, 3 days, 3 higher closes, 3 lower closes. But the basic model is closing and breakout at the highest closing price of the month or week, lowest closing price of the month or week. The coil sideways, our entry, our stop loss, break even point, and take profits. Keeping it simple. The coil sideways, though, is what traders need to train their eyes to identify as we coil into our EMAs. The most important part of this module is building your muscle memory. So we have our criteria. That's what puts the instrument onto our watch list. The lowest closing price of the month or week, highest closing price of the month or week, new month, new timing cycle. It's already in breakout. We have a new week starting, and we have a market coiled sideways into the open of our session. Now remember what the criteria were for being on this list. These setups have all delivered on indexes a minimum of 200 or more pips. And when you master the muscle memory of the market coiling sideways into a session and then taking a position, putting your stop in place, going to break even, and walking away. As we can see, there is nothing to manage on this trade. Rinse and repeat, scale it up in size. This is one of the best of the best. This is an example of a trend trade. So we have a market that's closed in breakout. We're on the front side of the month. Okay, we're in the front side of a new month. It's Thursday. The market closes in breakout, coils sideways on top of our breakout high of day level. We get our engulfment pin hammer inside of our EMAs to scale into this trade, place our stop loss. Once it closes outside the range, going to break even and walking away. One of the best trend trade coiled market ACB templates, the Dow Jones 30. We're looking at Bitcoin, and this is an example of where the market was already in breakout and closed as the highest closing price of the month the previous day, and then traded sideways on the new week, new timing cycle, new week, in a market that's in breakout, the highest closing price of the month, coiling sideways, a dump and coil into the open of the session into our 9 a.m. window. Similar template again, coil sideways, all in opportunity for range expansion in an existing market through the high of the month that is already in breakout. So it's broken out, closed the week in range underneath of our highest closing price of the month, dumping down and coiling into our open for the explosive trend continuation trade for an ACB all-in opportunity on a Monday on the front side of a new week on Bitcoin, crypto. So muscle memory again, coil sideways into our EMAs in our timing window, entry, stop loss, break even, and take profits. We have another example of a trend trade on Bitcoin. We have a first green day market that was already in breakout, closing its first green day. It broke out early in the day or Asian session, putting a high of day in place and coiling sideways. Again, a market that's first green day breaks out, coils sideways into our timing window, entry, stop loss, break even level, and walk away. An explosive range expansion coming out of the coil. No major red news on the calendar. Again, on a Monday, on the front side of a new week for the explosive trend trade ACB all-in opportunity. So coming back to our criteria, these markets have given over 200 plus pips of opportunity on these trades. The 3-session coil is where these large explosive range expansion trend trades can come from. Looking at an example of gold, so closing in breakout, highest closing price of the month, coiling sideways. This is an absolutely beautiful, textbook perfect sideways tightly wound coil. You'll notice on these very well engineered charts how tightly coiled the range is heading into our open. No major red news on the calendar, at which point the trade is already in breakout and at break even. The 10 a.m. major red news has no effect at all, and this market trades into the close of the day, taking profits and walking away. But this is an absolutely beautiful 5-star tightly wound coil, beautiful into our EMA, entry, stop loss, break even level, and walking away. An ACB template on gold for a trend trade in the long direction. Market closing in breakout, coiling sideways, front side of a new week, new timing cycle for the explosive trend trade continuation. ACB template. Beautiful reversal example. We have a market that has closed in breakout on the NASDAQ. The high of month was established on the Thursday, and the market dumped down, closing in breakout. So the market has been making higher highs, higher lows, and traders often get caught calling this a first red day. We have a market that's in breakout, long, closing in breakout at the low of day level after making higher highs and higher lows, coiling sideways into our new 4-hour rotation at 6 a.m. for an early entry opportunity in a market now that is potentially preparing to continue the trend in an explosive trend continuation trade. And this is a classic example of where the new 4-hour rotation at 6 a.m. begins the move. The 10 a.m. rotation continues the move, forcing retail to buy higher where early entry opportunities in line with the higher time frame trend had the 6 a.m. entry opportunity. Close and breakout in a trending market, coiling sideways, entry, stop loss, max risk, aligned with the higher time frame. If you're scaling in, managing our risk at that coil, going to break even and allowing the trade to play out. The New York session trades higher before coiling into our 10 a.m. new 4-hour rotation in an explosive trend continuation. 10 a.m. major red news has the stop hunt effect and coiling sideways into our EMAs and continuing into the close of the week. An ACB trend trade continuation after a close-in breakout against the trend. Coil sideways, entry, stop loss, break even, and take profits on the NASDAQ. Next, we're looking at a currency pair, the Euro New Zealand. Again, one of the potential instruments that can offer us the volatility necessary to have at least 100 pips, minimum criteria. So again, if you're looking at the Aussie dollar or the New Zealand dollar, the Swiss franc, any of the major pairs, even the euro, how often can you find a day where it moves in a coil for over 100 pips? And which is why I'm targeting instruments that are potentially, when they offer us this setup, are going to deliver on our risk reward opportunities. So we have maybe a little bit slightly more volatile instrument, but it's this setup that we're hunting. We have a market that closes as a first green day in breakout, coiling sideways, trading back into the high of day breakout level and coiling into our EMAs, into our New York session open. Entry, stop loss, our break even level, and our take profits towards the close of the day. So coil sideways, and this is a subtle variation of where we have a bit larger range, but recognizing the market closed in breakout as a first green day, we've traded back into the breakout level, coiled sideways into our timing window, a 3-session coil. Entry, stop loss, explosive breakout, break even level, and taking profits on the Euro New Zealand. And again, emphasizing for these currencies to make this list, they must have offered us at least 100 pips at the close of the day as a take profit level. The Euro New Zealand currency pair. We'll continue these in the next video, traders.